Welcome to the Military Wallet YouTube channel. Today we're joined by Darius Lester, an active duty financial literacy educator and founder of Mammoth Money Mindset and Mammoth Money Academy. Through his coaching courses and educational programs, Darius helps military members and families build wealth through budgeting, debt elimination, saving, and investing. His mission is to simplify personal finance so people can make better financial decisions with confidence and create long-term financial freedom. Darius, welcome to the show.
Thank you very much for having me. Amazing intro.
Oh yeah. Well, it's on your LinkedIn page and it's on your website. So we're gonna shout it loud.
For sure.
So it's good to see you again. I think we met a couple years ago at one of the FinCons, and I know you've been around and involved in this space. So you're actually serving on active duty, and what you're doing through your financial literacy programs is something that you're doing on the side. So I think that's wonderful. You're building a business, you're mentoring people, you're coaching people, and you're helping people make better financial decisions. That's what we're all about here. So can you tell us a little bit about yourself and how you got started being interested with personal finance, investing, and all those related topics?
So, I guess where it originally started, no one in my family was financially literate. The top of the line financial advice I got was from my mom, and she was like, "Hey, here's a bank account, there's a checking and a savings. Make sure you put money in your savings." And I was like, "All right, got it." That was the most any of my family ever talked about money, but I appreciate it, right? Because some people don't even have bank accounts. So that started me off. I ended up deciding to join the military at 19, and just kind of remembering her words. As soon as I joined, I started putting money into my savings account. I'm not really a person that wants for much, so I ended up saving a decent amount of money my first 4 years in the military. I was like a lot of money, probably around like 20 or 30,000. It was just
That's impressive. Yeah.
yeah, and I was just and honestly, it didn't feel like it. I'm a big advocate for like out of sight, out of mind. So I
Mhm.
had no idea what my savings was growing to because I never looked at it. It was just a lot of auto put to it. And then I also set up another rule to where if my checking account was ever higher than $1,000, I would take out whatever money's higher than it and put that into my savings. So yeah, pretty much between those two things, and then living in the dorms, moving out, having roommates, I just ended up saving a decent amount of money. But the financial literacy honestly came from the people I worked with in the military. One of my supervisors just randomly on some day pulled all of us, junior enlisted members in. It was like, "Hey, we're going to talk about credit." I myself, I've heard of credit cards. I wanted to avoid them. I never wanted anything to do with them. But he built a whole PowerPoint, showed us what credit was, why it was important to have it, and how it could hurt you by not having it. I had full intention of paying for everything for my entire life in cash and just letting that be it. But after learning that, I was like, okay, well, let me get a military star card. Let me start building up my credit. I met another guy. He was retired military, but he was working as a civilian. I was about to buy a new car with my $30,000 because I could just buy a Jaguar cash. I told him I was going to do that. He was like, "That's stupid. Go buy a house." And I was like, all right. Nobody listens their first time. A few years later, I actually did end up going and buying my first house. And then I started acquiring equity. And I was like, oh, okay, that's why this is important. A few other people I met in the military, they were talking about stocks and being in Facebook and Microsoft. And I'm like, what are you guys talking about? I didn't know what it was. I went and made a Robinhood account just because I wanted to be a part of the conversation. So honestly, all of my financial literacy stuff came from just different people I met throughout my military journey. And I just got very fascinated with it. I started reading books, and all the stuff I was learning excited me so much I couldn't stop myself from talking to other people about it. And just through that, I started becoming known as the money guy because I just keep sharing information. People are telling me I should start charging, make a business out of it. And yep, here we are.
Yeah, no, I love it. Everybody's got their story about how they got started. And, finance is one of those topics that is so broad and can be complicated that it takes a little bit of time, takes a lot of time, and it takes the experience of living through something before these situations actually sink in. Like you're talking about buying a house. On paper, you're like, okay, I understand the concept. But when you start seeing the equity and, you know, those things make sense.
Hmm.
But you have to be in the right time in the right place. So that's
Yes.
about meeting people where they are, and just there's no one size fits all approach for everybody. So what was the moment, I guess, where you said, this click, this is what I want to do. Yes, I've got my day job, the military. I love serving. I'm gonna ride that out because I enjoy it. I enjoy being part of that. But what was it that clicked that said, I need was there a specific moment or something that just said, I need to do this. This is what I need to where I need to be.
I enjoy helping people with it. I'd already been helping people with it just whenever they ask. I gave a lot of unsolicited advice. My family got annoyed with it. But I was actually and then, yeah, so business wise, it was 3 years ago. I was in a leadership course, and one of the instructor was the same rank I am, but I was talking to her about finances, and she was a life coach. And she was explaining to me how she did. And she was like, "Oh, you should just go be a finance coach." And then she's like, "Yep, you can do this. You can have clients. You can charge people." And I guess honestly, it was just because she was someone who was actively coaching and charging people for it as a business while she was also in the military. I was like, okay, well, she's doing it. I can do it. So honestly, literally, it was that one person and that one conversation and her just because she told me to do it. I was like, okay. And honestly, I went, and that day or the day after that I decided I wanted to do it, I, started framing out how to go about doing it, thinking of a price. Somebody messaged me on Facebook and said, "Hey, can you please help me with my money?" Like, it was probably within 24 hours of me mentally deciding I didn't put out any ads. I didn't tell anybody I was about to do this. It was honestly, she was stationed in Japan, and she messaged me and asked if I could help her with the money.
Okay.
I
Yeah.
I took that as a sign from God, like, hey, go do this. This is what you're supposed to be doing. And yeah, I've just been doing it since then.
Oh, I love that. It's I've been down the entrepreneur path as well. And sometimes taking that first step can be, I don't want to say it's always scary because it might not be scary, but you're stepping out into the unknown, right? You're doing something that you've never done before. There's no playbook for it. So it does take a little bit of a leap of faith. You need to have that faith in yourself, but you don't know what's going to happen. So anybody who's thinking about starting something, just do it. I've started websites, I've started podcasts, we're on one now. But other things, just take that leap because you might, even if it doesn't turn into a massive business, you're going to learn through that process. And
Yes.
what you learn about yourself is incredibly valuable. Sometimes even more than the outcome of what you're actually doing. So let's talk about this. Okay, you've got your first client, if you will. How did you get to Mammoth Money Mindset? And the name of your website and kind of the Mammoth Money Academy. Is there a story behind the name?
The story doesn't really run too deep. Honestly, it simply went from money is money. So I was like, okay, sure. I really liked elephants. Those are like my favorite animals. But I couldn't think of anything good to go with elephant. So I was like, "Oh, mammoths are pretty cool too." And I was like, "That's close enough to an elephant." And I was like, "Mammoth Money Mindset." It's like three M's. I was like,
You
"That's
got the
perfect. That
alliteration.
sounds
Yeah.
yeah." I was like, "That sounds good. It's pleasing to the eye." And then so my wife is a ballet teacher. She has a studio and stuff. Her friend is the one who helped her make her website and all these things. So I reached out to her and asked if her artist could make a logo for me. And then he made this logo. It's like a mammoth, but there's like a
Yeah.
M that's made with. And I was like, that's beautiful. All right, that's it. We'll just
You got the alliteration, you've got
yep,
the logo that's got the M and
yep.
the
I'm
I
good to
love it.
go.
Yeah.
That's it.
Yeah, my daughter dances ballet. She loves
Okay.
that. So I love hearing that your wife is in the arts too.
Hmm.
Okay, so you've got your business going, you've got some clients. As you're building this up, you're probably learning as much from them as they're learning from you, right? I'm
Yes,
assuming that as you're going, there's a lot of give and take.
for sure. I, right because I started this off with just a bunch of one-on-one coaching with different people. I was I was debt free. I had a decent amount of savings. I had some money invested in a few assets. I felt like I was doing decent with my financial journey. there were other people who were struggling in some of those areas. So I was like, okay, I can just tell you what I did, or I can listen to what you did and try to help you, adjust some things. So just listening to people's stories and how they got to where they were, or how their mind even processes their financial decisions, taught me a ton. Honestly, probably the biggest thing was I realized me knowing me knowing a lot about what to do with money honestly ended up having like little to nothing to do with coaching people through helping them with their money, because math is math, right? We all have learned math. We know when a number is bigger than another number, but it's all the other things behind it, the all the mental, all the emotional, families, just every other thing that can affect the math you should be doing to, manage your finances. So yeah, I've learned a ton from working with people through coaching.
Yeah, well, I guess that's where mindset comes into it, right? Because if it was just about information, as you know, as the joke goes, we'd all be billionaires with six pack abs, right?
Sure.
And so, but it's a lot about understanding where you're coming from, what you're trying to achieve, what are your or what do you want to call it, like a limiting belief you might have, or a
Yes.
mindset, some kind of factor that maybe it's the way you were raised, or these beliefs that you have that, oh, I can never be wealthy. That's not, I don't come from that side of town,
Hmm.
right?
Yep.
So yeah, I love that. So why don't we have a step back and look big picture. So you've coached dozens of people now, if not hundreds, and why don't we look at this from the perspective of new service members? Now, when I say new, it could be somebody who's young, or it could just be they're young in their finances, right? They don't have to
Sure.
be 18 years old. It's we're just coming into this. So we're somebody who's having our Darius moment where we're waking up and saying, "Oh, you know, I want to start making better financial decisions." What are some of the common mistakes that you see people making, or some of the common belief factors that they might have? And then we'll just kind of walk through this about how we can coach listeners and people so they can take their finances to that next level, when whatever that next level looks like for them.
Sure. So I guess I'll just start with, brand spanking new to the military. Probably setting up allotments, and, I guess that also falls into in your TSP. So I think it's super important for all military members to take advantage of TSP, right? It's basically your IRA, but you can put way more money into that than you can in IRA. So you should take full advantage while you can. And I think it's more important for new members because after you start making, two, three, four, $5,000 a month, and you're accustomed to spending that much money a month, it's going to be very difficult to say, all right, well, now give me 1,000 of that back. I'm going to start putting that in this other area, this retirement vehicle. Whereas if you just go ahead and you get used to giving up, 5, 10, 15% of your check as soon as you join, you now build your life and your habits around whatever's left. And then as you grow, you just get used to not having that. It is really interesting because me myself, I think just this past year I looked at, my taxes as I was filing them, and from the military, it was like, oh, you made, around like $90,000 or something this year. And I was like, man, I had no idea, because what actually shows up into my bank account, every paycheck is around 2 grand. Because I have so many allotments that are going to all these other places. I've been using allotments and auto pays since I became an adult. I don't have the best memory. I don't have the best discipline. People are like, "Oh, you're so disciplined." I'm not actually. I let the computer be disciplined for me. If it's not there, I can't spend it.
Yeah, well, automations are amazing for building. You build that habit one time, and then you just follow it, right? So I love automations as well. Put all of my credit cards on automatic payment, for
Sure.
example. Now I could pay cash. I never use a credit card for anything. I've never had a balance on a credit card that I've carried forward, so it just auto pays. I know, I look at it every month. I'm like, yep, I'll look at the expenses. So, yep, those are what I spent. And then it gets paid by the bank account because I won't remember, oh, this needs to be paid by the 1st or the 15th, or sometimes it's a random date that, the 27th. Who's going to remember the 27th? Nobody,
Right.
right? So I love that. And those automations apply to, like you said, the TSP, for example, comes directly out of your paycheck. If you're in the blended retirement system, you get that matching contribution.
Right.
Incredibly important to get that. But yeah, you can do it for setting up an IRA. If you want to have a different savings account, the money goes there. Some people will do it for car payments and things like that. I know that the military has changed rules for allotments for things
Right.
like debt, but you can set it up to go to, I want this to go to my brokerage, this to go to my savings, this to go to my checking, this to go to the
Yes.
TSP. And by doing that, you take all of the guesswork out of it. And I think that is an incredibly powerful way to build wealth on autopilot. So I love that.
Sure.
So that's, I guess, your number one recommendation for people is to get started that way.
Definitely. 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 Because it just sets up the rest of your life. Because it's just if you just if that's how you come into it, y- you get promoted, you get the annual pay bumps. It's beautiful that TSP isn't a number; it's a percentage. So as your money keeps going up, you're still putting 15% over there or whatever percentage you have it set to. So I think that's perfect. I'm glad they made it that way. Yes, that's my biggest recommendation for any new people is to just take a few minutes, set up some allotments to break out your money so all of it doesn't just go to your checking account because more likely than not, when you see all that money in there, you believe you have all that money to spend, and then you just get into a habit of it. And it's harder to go backwards than just to set it up in the beginning.
Yeah, agreed 100%. And, a lot of people will say, okay, when you make a pay raise or you get a promotion, for example, or you get a pay raise, you can bump up your TSP, for example, or your savings, or however you're doing that, a percentage of your raise. So let's say you're making $1,000 a month and now you're making 1,100. Okay, instead of just taking that 100 and going and putting that into your spending account, maybe take half of that, say 50 goes to your investments and then 50 goes towards your savings. So you can gradually increase your standard of living
Right.
without doing all of it. Because as you said, if it's in there, most people are going to say, well, it's available to spend. I love that. Okay. So number one is let's put some things on autopilot. Let's put what we need for our basic expenses plus a small buffer into our checking account so we're covered. And then the rest we want to allocate toward uh, savings goals, whatever those goals may be,
Sure.
savings, investment. How do you look at those when you're working with a new client, or maybe it's just a new airman or a troop in your squadron? How would you handle that? Because everybody's situation is a little bit different.
For sure. So normally, because right, people have that question a lot. They're like, "All right, I want to save." They'll ask me how much, and it's like, "Well, it depends." I like to have them answer that themselves. So the way I normally frame it is like, okay, how much do you need to live? For a month or so, how much does that cost you? Let's say it costs you 3,000 or so to live every month, and this may not be a brand new person. Maybe it's a little older, but it's fine. The math still maths. So let's say it costs $3,000 a month, for you to pay for everything, all the lights, all the rent, mortgage, whatever it is, however much food it is. If you have family dependents, it costs you $3,000. It's like, all right, cool. I like for everyone to have at least 3 months of that. And then depending on how your family's set up, so maybe I like to throw in a little caveat. If you are the sole provider, for your household, if everyone is depending on you to make your money for them all to live, you might want to bump that up a few more months. You might want to go to 6 months. But honestly, I'm a big advocate for stopping after that, after you get 6 months, because I'm a heavy investor. So I like to frame it as sure, because I've met lots of people who have, I mean, I was one of them who had, 20, 30, $40,000, in their savings or their checking account. And beautiful. Great on you for being able to keep that money. But when we're talking about growing wealth and setting yourself up better for the future, maybe for early retirement, you're not going to get there through your checking account. You're not going to get there through your standard savings. My first bank was USAA. I would imagine, it's like their savings is 0.01%. You're never going to get anywhere with that. So again, I mean, another person that I've met in the military introduced me to high yield savings accounts. I had no idea that was even a thing until I was like 27. And it was just because a guy I worked with happened to tell me about it. I was like, there's banks with higher interest. I was like, is it? And I think there's a stigma that goes around about high yield savings accounts that if you put your money in there, it's really hard to get the money out. Because I'll bring up the concept, I'll show them the math. I'm like, hey, just take that money, put it over here. It's just going to make more of itself than the other one. They're just like, that sounds good, but what if I need the money? I was like, you take it out. It's a savings account. It's fine. It literally works the same way. And they're like,
Yeah, just transfer it.
yeah,
Yep.
I'm telling you, I've met so many people who are afraid to put their money into a high yield savings account because they feel like it'll be lost to them. And honestly, that maybe that hits on some of the trauma people face with their finances, or however they grew up and things. They really need their money to be like instantly accessible. So something I bring up to those people is like, all right, you got $40,000 in your checking account. Yes, you can reach it whenever you need to. What emergency is going to happen that you need $40,000 today? And I'll just, let silence fill the room. And I have not had anyone give me a good answer yet. And they're like, I don't know. I can't think of it. I'm like, me either. I have no
Yep.
idea what emergency could possibly happen to where you would need $40,000 today. So it sounds like you can have your money in some of these other vehicles that accrue more interest over time. And if, the worst possible thing did happen, you would be able to have a day or two if you needed to transfer money. So yeah, after they hear that, they're only more open to high yield savings accounts and then maybe even investing.
Yeah. Well, I think that's a great way to look at it. A lot of people want to have that large emergency fund because it feels safe. It
Right.
feels stable, right? Especially if you didn't grow up with a lot of money. Being able to look at, you mentioned $40,000, for example, but that number might be different for anybody. It
Sure.
might be 10, it might be 20,000,
Hmm.
whatever number is big to you. But having that money and having it in my checking account, and I look at it and say, "Oh, wow, that's a lot of money." But you're right. There's no emergency I can think of that most military members would need $40,000 today,
Hmm.
because we have access to amazing health insurance.
Sure.
So health emergency, not going to be it. You need a new car, great. You can wire it to to the dealership. And you probably don't need a $40,000 car anyway. But I'm looking at like big expenses. What costs more than $40,000? A down payment on a house, great. You can have it in your savings account. You can wire it when you're doing your transfer. So yeah, I love that mindset, and I hope that helps people realize, yeah, maybe I can put this money to work for me. Now you mentioned high yield savings accounts. I have one as well. I
Sure.
use my checking account for my day-to-day expenses, my extra savings. I try to have a little bit extra in cash savings because I'm more of the entrepreneur and my income is irregular. So I like to have a little bit extra cash savings
That
so I
makes sense.
don't have to pull from investments. But now you mentioned investments. So how would you approach somebody who's new to, it doesn't have to be new to the military, somebody new to finances? How would you help them get in started with investing?
So the way I normally like to break it out is I'll go to like Investopedia, right? They have a beautiful calculator, and I will just pull up. I'll jump on Google in front of them, and it's like, hey, what's your bank? And then I'll just pull up whatever that bank is. I'll search their checking account interest rate, their savings account interest rate. I'll take that. I'll pull up a high yield savings, bank, and I'll pull that interest rate, and then I'll pull up the S&P's, rate of return over the last, 20, 30 years. And I'll just show them the differences, between them, hypothetically, if they kept X amount of dollars in any of them. That kind of helps the mindset instead of just saying, hey, start putting your money into stocks. People get real scared. They're like, what if this happens? What if it goes down? This, and that. I explain stuff does go down sometimes, but if you look over the long term, and I'll show them charts, you see this line is going up, there's squiggles, it goes down. I like to show people COVID. Um, yeah, I love to show people COVID, right? Because it's something that happened recently. We all remember it. The world shut down and things. And I'll, zoom in on it and it'll show where COVID dropped and, the S&P 500 dropped. And it was like, you remember COVID? COVID was terrible, right? Everybody thought it was the end of the world, multiple nations shutting down, all this stuff. But it's like, look at that to now to 2026, you can barely even see that dip. It looks non-existent. And it's like, get that into your mind when you're thinking about, investing for the long term. It is scary, but over time, this is what's happened. Because of that, you can trust that your money will do that over a long period of time as well. So that's normally how I introduce them to it. And then from there, I just get into breaking down, what a stock is, what an index fund is, what mutual funds are, ETFs. And then we kind of go from there. And then I let them look up some of their favorite companies. And that's normally how we build to it.
Yeah, no, I love that perspective, and I've shown people taking a similar approach where you show the S&P 500 over years, and you can actually go back. COVID is a perfect example because it's within the last 5 years, and everybody remembers that. But you can also go back to the Great Recession that we had with the housing crisis.
Yep.
You can go back further than that to the dot-com bubble in 2001. You can go back to every major issue that we've had in our economy over the last 100 years, and it always bounces back stronger. Obviously, past results don't equal future returns, right?
Sure.
However, the economy in general, world economy in general, is always going to go up and to the right. Yes, we will have setbacks, but over time, capitalism is at work and companies are always going to find a way to provide value to people. New technologies are going to come online, things are going to happen, and wealth will be created. So we want to get a portion of that wealth if
Right.
we can. And I'm not the only way. One of the best passive ways to do that is by investing in the stock market because you're buying, especially if you're using index funds or using the TSP, you're buying a little slice of almost everything. And when
Right.
you do that, you're going to get the winners. You'll get the losers too, but the winners over time win out. So I love that approach. So what's next in that process after you've shown people, okay, now we've gotten things in hand where we're going to do some allotments to set it up where we're going to invest in the TSP, or we might take some from instead of putting everything in checking, we put some in savings, some in investments. What are some of the other things that you're coaching people through?
So honestly, most of the people normally when people sign up for coaching, it's not because they're in a neutral spot to where they can just
Yeah.
start, putting
Yep.
money
Yep.
into savings and investing. Normally they are in the negatives.
Yep.
So majority of the coaching work ends up being, okay, you know, I need you to show me the dirty laundry. Like I need to add, and I'm like, hey, it's gonna hurt. It's gonna be uncomfortable. I know you don't want to pull it up, but yeah, I need to see all the accounts, every debt that you have. Let's write it down. We'll get a shared Google sheet that we can both, add and change. I'm like, yep, I need all of that. I need the interest amounts on all these. And I do that one because I think a lot of us hide from our finances, which again kind of hits some maybe some sort of trauma. But it's only after you lay everything out that you can start to pick and choose to what to fix and what to improve on. So yeah, that's a big part of my thing is helping people budget. It's like, hey, we did this, we did this. If we continue on this path, this is where we're gonna go. I'll ask them, I'm like, do you want to continue on this path? I know you want all these things that you've been spending money on. How important are they to you to where the trajectory of your life is going this way? You try to walk them through it to where they are the ones who are choosing to do stuff. I love kind of walking people into them choosing what stuff they're going to stop doing, right? I don't want to tell them, hey, you need to stop going to the movie every Saturday, or you need to, give up your roller derby team. I don't want to tell you to do that stuff. I want you to, your life better than me. These numbers don't work. So what can we take out? What can we cut back on to where you can still enjoy life, but you can be improving your situation? So yeah, a lot of it is budgeting and debt. before we get into investing or anything, I'm very big into, I mean, credit card debt is just, it's too expensive. If your interest rates are 20 plus, you're not going to overcome that. We have to knock that down before we can start doing other things.
100%. Yeah, no, I agree with you. And usually that's when somebody's reaching out for a coach, right? There's only so much we can do on our own oftentimes before we realize, it would be faster and easier for me to hire a coach. And that goes with, look, I've put on probably 10 or 15 pounds. I could probably lose a little bit of that. So that would be the same thing for me. I need to start getting to the gym a little bit more. I can do what I can do, but if I had a coach helping me out, that would
Right.
probably I would make faster gains, right? And I would
Mhm.
have that accountability. And when you start putting your money where your mouth is, you're
Yes.
like, okay, I'm paying for this, I'm gonna do it. So yeah, there's that. Totally get all of that. So what are some of those common mistakes that you're seeing then? Credit card debt you mentioned. I'm sure I've seen the 20% interest loans on cars. I'm sure you've
Or
seen a lot of those, and you've seen that airman who the first time they get out of the dorms are like, well, I'm gonna go buy a new car, go do that, and they don't talk to anybody. So, what are some of those mistakes that you're seeing, and what are some of the common ways that you're helping people in coaching them to get out of these situations?
let's talk about like airmen moving out of dorms. There's like a subgroup of people who are like, all right, I've been living in the barracks, I've been living in the dorms, I'm finally moving out. I want to live an amazing life out of the gate. And they go and they try to get a high rise apartment or something, not taking into account that they need to now budget for food and for the gas, the distance between, because they used to live on the base, now they're off the base. So they'll just see that number and they're like, ah, my check number is higher than that rent number. I'm good. And they
Yeah,
are
and
not good.
utilities and insurance and yeah.
Right.
Uh-huh.
They have, and it's tons of young people. They have no idea all the other
Yeah.
expenses that come with living somewhere and commuting and buying your own food and
Mhm.
all those things. So I see that a lot with brand new airmen. So I mean, some people can't deal with it, but I'll tell people my story. I I mean, I'm super frugal, right? But I moved off of base and I moved into an apartment with three other guys because one of them, he was about to PCS to Germany. So I was going to take his spot. So, I mean, the first month or two, I was sleeping on the couch. It was a three-bedroom apartment, but there's four of us in there.
Yep. Yep.
And, some people are like, oh, that sounds horrible. Couch was very comfortable. And like I said, I mean, I'm coming from a barracks, from dorm, so it wasn't that big a deal. I'm in a much bigger space, and the really great side was we're four people are paying for one apartment. So that is another part of how I ended up saving so much. I'm paying $200-300 a month, to live there.
Yeah, that's
So
huge. So you're
yeah,
banking that
yes,
BAH and yeah, that's a
for
wonderful
sure.
way to do it. Yeah.
So I'm a big advocate for, if you're already used to living with people in, the barracks and stuff, if you can, don't spoil it, but trying to go and have your entire house to yourself or so. Be okay with having a roommate, and then you can use that, build your money up, do something else later. Obviously now the way I am, I'm more into real estate. I would even be like, all right, think about getting a house, getting a duplex, getting a triplex. That gets into more of like a business minded thing. But just on the barest terms, roommates are pretty great. You can save up a lot of money by having them.
Yeah.
Just overdoing their living expenses as soon as they move off the base is a big problem.
Yep, yep. I saw a lot of that. I had a lot of friends who did the roommate thing when I was on active duty. I didn't do a roommate. There's a couple reasons I didn't, but I got my first apartment off base was an efficiency, and I took it very slowly. One of the big mistakes I've seen a lot of young people make is trying to live their parents' standard of living as soon as they get out on their own. And, they don't understand sometimes that their parents or the way they grew up, their parents had a 20-year head start to get
Mhm.
to that point.
Right.
So you can't get that far that fast without either making a lot of money or accruing a lot of debt. So when I moved out, I decided I was going to not take on any debt. I bought a futon and I had an efficiency apartment. And my futon was my couch and I had a TV, a folding table, folding chairs. I wasn't trying to impress
Golden.
anybody,
Mhm.
but I also wasn't trying to spend all my money. And over time, I used Craigslist and you could use Facebook Marketplace. That wasn't around at the time for me, but
Right.
you can use that to go find secondhand furniture or shop sales. There's a lot of used furniture stores, Airman's Attic, if you're in the Air Force. Other branches have similar types of stores on their installations as well. So there are ways that you can furnish an apartment or a house very inexpensively. I did it that way. Obviously, taking on a roommate is a great way to do that too. So I love that. I love that approach. What is the next thing that you're looking at beyond the housing situation?
Right. So, I mean, other issues that people run into is a lot of the people I've helped. Do I want to call it a family issue? Maybe, for lack of better words, we'll call it family issues. Meaning that wherever they come from, whatever their background is, they got out of there because they joined the military, right? They're in a whole new place, making a decent amount of money, making their own money. Their families see that, and they're a lot of people think people in the military are rich for some reason. And they're like, oh, no, so and so, Chad went off to join the Air Force or the Army. He has all this money now. He got a new Camaro. And a lot of people give their family members a ton of money. I've worked with multiple people who seem like they should be good savers. They'll tell me, they're like, nope, I did. I set up my allotment. I did this, this, and this, but I just can't keep money in the savings account. And I was like, that doesn't make sense. And well, the more we dive into it, one of my clients, she gives her mom, you know, 500, $600 every month just for random things that her mom does. I think her mom was taking it for like a trip. One time it was because of the car, and it's like I I get it. I have a mom. I want to be able to help my mom with everything. I don't want to tell you not to help your mom, but there has to be a balance. It's not helpful to our family members if we give them our last over and over and over again. What was it? There's a book, Richest Man in Babylon. I love that book. It's
That's a good
very,
one.
yeah,
Yeah.
it's really good, and it's nice, great stories. So one of the ones in there, I think he was talking to the money lender, and he was letting him know when it's okay to lend money and when it's not okay to lend money. And he was like, it's not okay to lend money if you lending the money is stopping you from reaching your goals. With that in mind, if your goal is for your savings account to reach 5,000 or so, and you know that you're putting 500 in there a month, but you're also giving 500 away every month, you're never going to have a savings account. You're not prepared for any of your own emergencies now because you keep helping out your family members. So it's like, I need you to speak with them and let them know that, because there's a large group of people in the world who believe, oh, you have money in your savings, that means you have money to give. And that's not the case. So yeah, trying to break that mindset in not just the clients, but their family members as well, so they can start to have an emergency savings and hopefully grow to other, assets.
Yeah, those are very challenging situations because of the family dynamic, and sometimes just there's cultural expectations. So it's really hard to navigate that. So I'm glad you brought that up. Okay, as we're going through here and you're coaching your clients, I'm sure budgeting is probably something that's new for them. Learning things like emergency funds and how to get out of debt. What are some of the other tools that you're giving them? And what are some of the tools people who are listening can start implementing in their lives so that they can start making these changes going forward?
I mean, tools wise, one of my favorite was, I think it's debt, debt it. Yeah, if you type that in on Google, basically you can put in all of your credit cards, home loans, student loans, whatever it is, and then it will help you with either the snowball method or the avalanche method, just to kind of let you know what order you should pay off your debts. Because the normal thought process I would think for most people is, okay, I have four debts. I have this much money. I'm just going to break up my money 25%, 25%, 25%, 25% until I pay off all the debts. But you'll realize after you utilize the snowball method that that's an inefficient way, and you'll be in debt much longer because you weren't focusing certain debts, but you're paying the interest on all of them. So I like that as a tool. I think that's super helpful. I like apps like Rocket Money. I think that's just fantastic. I love that it pools all of these, all your credit cards, I mean, you can throw everything on there now. Your credit cards, your mortgage, you can put your stock portfolios on there. It'll track all of it. And I really enjoy that because it'll notify you whenever there's a large purchase that's made. It'll notify you whenever you earn money from any avenue. It'll let you know when you've spent more than you spent the month prior. I think that's one of the best things. It'll show a little line. It's like, yep, here's how you spent last month. And it's like, here's where you're already at. And it's only the 15th. So it's just a reminder to yourself of like, you know what? Let me cook at home maybe for the rest of the month. So I like stuff like that. And then actually at FinCon, they've been going back and forth, but there is a company called Qube. I don't know if you ever talked to them. It's Qube Money. And basically, they took the envelope form of budgeting, when you used to take money, put it into different envelopes, and then that would help you because it's like, oh, this envelope's empty. I can't do this thing anymore. They took that and they digitalized it to where your debit card is broken up into multiple cubes, and you would have to actually go into the app to be able to use your debit card because you'd have to pick that specific envelope or cube before you can spend money off of it. I thought that was fantastic. I was like, this is really cool because it makes you do an annoying process before you can spend money. So it's like, and if your money runs out from your fast food cube, it's like, I can't. I would have to go through the task of moving my money from my, vacation savings to fast food to spend it. And that feels terrible. So I think that's a great way to kind of break through some of the bad spending habits people have. So those are some of the tools that I like to kind of throw out to people.
Yeah, well, thanks for sharing those. I know just kind of automating things, right? We talked about that earlier about automating your savings and investments, but using tools to help you realize where you are. So tracking your money, I'm a big fan of that as well. I have a personal spreadsheet that I've been updating for over a decade now, but I manually go into each of my accounts every month, put the amount in there, and it tallies everything up, and I can see charts and graphs and all that fun stuff. But the act of logging into my accounts every month gives me that physical sensation of, okay, here's how much I have. I know this. I do it for my investments too, not because I'm trying to go in there and actively day trade or anything like that. I do everything with index funds and mutual funds, but it's again, so I have the act of logging into the account and tracking it, and just doing that on a monthly basis instead of automating it gives me that touch point that I need. But I like what you mentioned too about the automations with the Rocket Money, for example, saying, "Hey, you're on pace to blow past your budget that you spent last month." So there's pros and cons to every method. I
Sure.
think the key is really just finding what works for you
Exactly.
and then sticking to it. I love that. Okay. So are there, as we're going through this, are there any rules of thumb that you found that are helpful for people getting started out? And that rule of thumb might be save 10% or always do this or XYZ. Now I understand rules of thumb are just that. They're kind of ballpark things. They don't work for everyone, but there are usually a few truths that are broadly applicable to most people, and you can kind of tweak them for your personal needs. So I'm wondering if you have any of those kinds of things that you found work for you and your client base.
I am a humongous advocate for the pay yourself first. I think that's probably the best finance words I've ever heard because before you understand it, I think a lot of us are under the assumption that we do pay ourselves. We're like, oh, I pay myself. I get paid every month. I get paid twice a month. And it's like, sure, but then what do you do with the money? And it's like, oh, well, you're paying your electric bill, you're paying your rent, so you're paying all these other people. And then you go back down to zero and you wait for your next check. So it's like, oh, where's the money you paid yourself? And then they look confused. And it's like, right. So you need to pay yourself first. As soon as you get that check, I do. I'm big on like self worth and things like that, right? That kind of gets more into the mindset thing, having an abundance mindset as opposed to a poverty mindset. It's like, no, you're important. Who knows what job you're going to have 10, 20 years from now? It may not be the one that you're at now. It's not going to be this apartment that you're renting. It's not this electric company. You need to start giving yourself money. And that's what I consider investments. So I love pay yourself first. I think it's a great monetary thing to do and a great like emotional, mental thing to do as well. 'Cause you start to value yourself and see yourself differently, then you can start seeing money differently.
Yeah, I love that. It's the big rocks in life, right? Fill your bucket with the big rocks, then put the small rocks in because the small rocks will fill in all the gaps. But if you do the small rocks first, there won't be any space left for the big ones. So that works with your budget. It works for anything, scheduling, exercise, anything that's important to you in life. So I absolutely love that. So when we're looking at Mammoth Money Mindset, we're talking about changing our mindset, changing the way we approach money and using money as a tool to achieve those things that are important to us in life. And I love how you've talked about that mindset approach. Because everything that you're talking about, it's not just like here's the math, here's the numbers, do this.
Right.
I'm telling you here's how to do this. You're talking about people, sorry, you're helping them realize here are some of the things that you're doing and it's on paper. You understand some of these don't work. You have to choose which ones are important to you. And I love that because that's how they're going to have the buy-in and that's how they're going to
Right.
make those changes. So when we're looking at mindset, what is something that when you're looking at financial success, what does that mean to you and what are you working toward? And I want to put that question out there because I want other people to think about it as well. And I want that to kind of be one of their takeaways. When you're defining financial success, what does that look like?
For me personally, financial success is so I'm married now. I'm married. I have a 15-year-old son that was already with my wife, and I have a 16-month-old daughter. So for me personally, my financial success, where I can kind of check it and believe that I'm successful financially, is to where at least all the things, because people's stuff they want can change and it may elevate when they realize you have more money. But I would say for the things that I can recognize that they want now and dreams that they have now before anything gets inflated, when I'm at a point to where I can give them all of those things without effort. I'm in a place to where, I'm good, bills are paid, investments are still being made. I didn't have to lower any money on anything. I'm still dollar cost averaging into stuff. Everything's fine. But also, when my wife tells me she wants I don't know, whatever new pair of shoes, and I'm some days I may choose not to get them just because I don't want to have so many shoes every day. But to where I'm at least comfortable to where I can go and get them, because she wants them and I really want her to be able to enjoy having them. Whenever my daughter, wants, I mean, my daughter loves everything now. She's 16 months. She's just happy to be alive. But my son's getting into guitar a lot and he's saying he wants a new case and a new amp and things like that to where I can just buy these things that are helping their standard of living, their following their dreams, helping what makes them happy to where I can go and acquire all these things and I don't have to, go triple check my account or move stuff around or take stuff away from something to be able to do that. So for me, that'll be where I'm financially successful. And then that is also going to be like post military. So even if I didn't have a job paying me, W-2 money, I'm still able to do these things.
I love that. And I think everybody's going to define financial success their own way. I love that you did that and I put you on the spot there, but I think you had a really good answer there. And I think most people, that's probably going to be something similar where they can meet all of their basic needs and still have money for some of the extras without having to go double check their bank account every time, or asking, well, how long is it going to take to pay it off if I
Right.
borrow money, that kind of thing. So no, I love that. And financial success to everybody is going to have a different meaning. Mine is going to be very similar to yours. I don't have it boiled down to one sentence, but it's that same kind of concept where I can cover all of my basic needs and I can take care of my wife and my children, and we can still do those fun things, whether that's a vacation or going out to a random restaurant, and not worrying about, can we fit that into the budget. So
Right.
I love that, and I hope, as a kind of a closing moment, that anybody who's listening to this will take that step back and think about, what does financial success look like to you? Because, saving is great. Numbers on a spreadsheet are great, but having $1 billion doesn't mean anything in the world if you're not happy or if you're not able to use it. Having, just enough in the bank might be all you need. So think about what's important to you. Think about what success looks like, and then find a systematic way to start working toward that. So, Darius, thank you so much for joining us today. I appreciate all the wisdom that you've shared with us,
Sure.
uh, all the tips. Is there anywhere that you'd like people to, where can people find you? And if they want to get in touch with you through your website, YouTube channel, anything like that?
So I'm on most of the major social medias. So on Instagram, it's D, like the letter D for Darius, and then Money Mammoth. So D Money Mammoth. I have a school community where I help military members get started with stock investing. It's free. It's free for all military members. You can learn everything about the stock market and what candle charts are, all that good stuff. I just want more people to know about it. So yep, you'll see a link for that on there. And then I'm also on YouTube. It's Mammoth Money Academy on YouTube. You'll see me just talking about either the stock market or random financial literacy tips. So, yep, as Darius Lester, uh, thank you for having me.
Awesome. Well, thanks so much, Darius, for joining us. And as always, thank you for your service.
Thank you.